Carsten, thanks very much for inviting us here to the offices of Linklaters in Frankfurt. Just tell me a little bit more about what you're seeing in terms of the main trends at the moment for the German market.
Talking about the market is changing dramatically. I think we come from a bricks and mortar orientation and yield orientation to a more operational model. So you will see not only in the office space where WeWork is certainly the first call, but also in other sectors like senior living, student housing. You will see that operators become a brand, and these brands will be much more successful than the guys just lending houses and blocks. And
you're obviously working with WeWork. Huge growth obviously in London and also in Manhattan. What's the situation here in Germany?
I mean, it's an extraordinary story that started in 2010, and we started advising WeWork in 2015, entering the German market. In Manhattan, WeWork, I think, still is the largest, has the largest intake in terms of real estate space, same or similar for London. And they are now operating in Germany. I think they have 10 plus centers open. And this is a phase of hypergrowth, so there's at least another 10 to come. And in terms of spaces, that means a lot, especially if you look at slightly overheated markets in Munich and stuff, where there is hardly any office space left.
And in terms of international capital, what are you seeing? Who's buying and who's selling, Carsten?
Germany is still the safe haven in Europe, so it's also due to Brexit, it's not a leading investment destination in Europe. We had a 60 billion plus turnover into commercial real estate last year, and investors come from all over the place. Strong demand from Asian investors, especially Singapore, Korea, and possibly Japan to come. But the old investors, the countries like US, the UK, are still very active as well. They all chase the same product, basically core office in the big 7 cities. And a very strong demand for logistics.
And there's been a lot of focus on regulatory changes or suggested regulatory changes. How do you see those influencing the market?
It's a very Berlin-centered discussion. I mean, there is an undersupply of affordable apartments basically in all the top cities. So it is causing problems. But there's a lot of stock being built, so I think things will change over time. So I can see that there is affordable apartments in the pipeline, and I think in Berlin it is a very political discussion. It has some good ends because it starts a discussion that needs to be taken place, but nevertheless, I think from a legal perspective, it's basically impossible to say, okay, these are the rents and you apply them. Unless the city would be prepared to also invest into the market, meaning exercising preemption rights or anything like this. Berlin has no money as a city, so I don't see that happening. So for the time being, I think it is more a political discussion than anything else.
And in terms of some of the niche areas, micro-living, co-living, student housing, will they be affected by this legislation?
I don't think so. This is like more commercial operations like hotels, and it is thinkable that one kind of creates a law to say, okay, you have to apply these prices to these products, but it goes a bit too far. I don't see that happening. It is more the affordable resi space that might be impacted.
Great. Thanks very much for joining us today.
Thank you.